Hello, you're watching Economic Lifelines Nigeria. I'm Wole Famrewa. The Asset Management Corporation of Nigeria has announced a comprehensive plan to refinance its debt. Now, the plan reflects the progress made in the recovery of loans bought to stabilize Nigeria's banking sector. Now, a key part of AMCON plan is also to sell the 3 banks it acquired during the process. In today's episode of our program, we examine AMCON's debt refinancing plan, what it means for the broader economy, and of course, what it's going to take for them to pay back their debts. A central piece in a plan that saved the banking sector on the brink of collapse. The Asset Management Corporation of Nigeria will go down in history as the vehicle used to clean out bad loans from the balance sheets of Nigerian banks in the aftermath of a global economic and financial crisis. But in exchange for a series of bonds, AMCON did more than just buy up problematic loans.
More AMCON bonds were created later on in 2011 to fund the negative equity positions of some of the intervened banks then, in order to make them ready for acquisition or mergers with other institutions. And that was significant as well in contributing to the total of the outstanding AMCON bond.
The second, of course, was for price discovery, which, of course, because AMCON knew that at some point in time it was going to issue more bonds, and also for the benefit of valuing the existing AMCON bonds, which was given to the banks on December 31st, 2010. What AMCON then did was to do a price recovery by issuing bonds to the market, by selling bonds to the public. And of course, that's, as we speak today, I think about 17 billion of that in face value is still in the market, discounted value around 12.3 billion worth of bonds, and that's the second part. The third part, of course, again, was those that were actually issued for financial accommodation, which, if you like, you may call the Deposit Restoration Fund, which, of course, for instance, in the case of Oceanic Bank, which eventually was bought over by ETI, what AMCON did was to plug the negative shareholders fund by giving financial accommodation bonds. Of course, the same thing goes for the likes of Intercontinental Bank and, of course, Fin Bank, which FCMB later acquired. So that, again, was the third part of the AMCON bond. The fourth part, which, of course, came on the August 8th, 2011, and that was largely because AMCON needed to buy the bridge banks from the NDIC.
At the end of this year, the first of a series of AMCON bonds will be due for redemption. In all, AMCON issued 7 different bonds at rates between 10.1 and 13%, with a total value of 5.7 trillion naira at maturity. The means and strategy to settle its debts is important for several reasons. First, AMCON's debt is guaranteed by the Nigerian government. This means that the government will be expected to settle any shortfall should AMCON's funding strategy fail to raise enough cash to pay bondholders. Considering the potential of the AMCON bonds to raise the Nigerian government's total debt stock by 75%, a plan to settle them has implications for the country's credit and debt sustainability ratings. Second, AMCON initially issued 3-year zero-coupon bonds that have to be refinanced as AMCON needs more time to raise the money to pay bond investors. Analysts say that any attempts to refinance 5.7 trillion naira through a fresh bond issue could crowd out corporate and subnational issuers in Nigeria's debt market.
We're trying to reduce AMCON's liabilities in a responsible way, in a sustainable way, and also in a way that doesn't disrupt either monetary policy or disrupt the financial markets.
This approach is less risky in the sense that refinancing such a significant quantum of debt, as AMCON were mulling over a few weeks ago even, in the market would have been a challenge. Both, they were looking at international and local markets, and it would have been a challenge. In terms of the size would have been a challenge for the domestic market, and even internationally, you are now assuming a certain level of risk, currency risk, say, that may not be ideal for AMCON to be saddled with, all things considered, given the other issues they're battling with. So I think this option is relatively painless in terms of the likelihood of disruption to the financial market. If you had had a refinancing that was not entirely successful, for instance, that could have created some disquiet, might have required intervention, maybe on the part of the sovereign, which clearly was not ideal, might have just caused volatility in the Nigerian financial market space and might have crowded out the local debt market, corporate debt market, which is an accusation that is frequently leveled at the sovereign in general anyway. So this removes all that.
For instance, the Malaysian model, the Swedish model, and of course even the model in the UK was a little different from Nigeria in the sense that in all those markets that I've mentioned earlier, what happened was that the government was actually the one responsible for bailing them out. Yes, they did set up AMCON, they did set up, their own wasn't AMCON, but was more of like an AMC, an asset management company, which typically either it's centralized or maybe it's set on a case-by-case basis for each of the banks. What you typically find out is that the government has always been the one who bears the burden. So at the end of the day, the cost goes to the taxpayers. But in the case of Nigeria here, and that's what makes it different, the banks are actually the ones paying for this, in the sense that the bulk of the cash flows of AMCON that is expected to actually be used in redeeming the liabilities of AMCON, which of course are the AMCON bonds, they're actually going to come from the Resolution Trust Fund.
AMCON's plan includes the redemption of 2 trillion naira in bonds to private sector investors and a refinancing deal with the central bank that effectively rolls over the balance of about 3.6 trillion naira bonds. This will be repaid over the lifetime of AMCON.
We've looked at what we recovered to date, we looked at the sinking fund balances, and we thought it was most responsible to reduce the total debt by 2 trillion and then refinance the balance, 3.6 trillion approximately, on a bilateral basis with the Central Bank of Nigeria.
Well, we'll try to manage it. Obviously, 1 trillion naira is a lot of money. The good thing is obviously we're not pumping an additional 1 trillion naira into the system. The net effect might actually be a contraction in money supply. And because AMCON is effectively cancelling 1 trillion naira of bonds that it currently owes the holders and exchanging that with 1 trillion naira of securities that it will be holding on its asset book. So you have a reduction in net credit to the private sector of 1 trillion. So that is basically what we've got to manage. How much of that is in securities? How much money do we need to put in? A lot depends on whether those securities are being used right now by banks for liquidity. I don't think so. And therefore, in terms of affecting market liquidity, it will be negligible.
Well, 1.7 trillion is maturing Series 1, December 2013.
Right.
Of the 1.7 trillion, approximately 700 billion is held by the Central Bank of Nigeria today. The billion is held by other institutions, banks, pension funds, and other holders of the bonds. So the plan is to pay off the 1 trillion with cash and marketable securities, mostly treasury bills, and some of AMCON bonds that we've actually repurchased. We want to retire those bonds. So that's 1 trillion. And then the 700 billion of CBN will be refinanced. But also at the same time, the series 2, 3, 4 are held largely by CBN. We also want to then refinance them at the same time, so pre-refinance them, so that we retire series 1, 2, 3, 4. That will make the refinancing in December this year in the order of 3.6 trillion. And with that money, we'll retire all the series 1, 2, 3, 4 bonds. The 700 CBN has, they will resubscribe, will be paid off, but they will subscribe to the new bond of 3.6 trillion. And so at the end of the exercise, there'll be about 900 billion left being held by the public. Now that's series 5 only. We may invite holders of series 5 who want to retire their bonds to come and retire some of their bonds. But in any case, by end of the year 2014, we will have paid off the 900 billion left in the hands of the public. And so the only bond we'll have outstanding will be the CBN bond of 3.6 trillion.
However, while many laud the merits in AMCON's approach to refinancing its debts, AMCON's critical challenge remains.
You have to make a few assumptions, right? I mean, I admit, I haven't done the academically rigorous thing of building a robust model, but if you look at it, the banking sector sinking fund contributions of 50 basis points of total assets. You have to assume what growth rate for total assets over the decade of AMCON's likely existence. Between 2003 and 2011, the Nigerian total banking sector total assets grew 23.5%. But then consolidation is embedded in there, and that exaggerated the figure a bit. So you have to say, well, is 23% feasible? Maybe 15 to 20 is more realistic when you factor in financial inclusion and the central bank's drive to grow the banking sector. You have to assume that will succeed to some extent. So 15 to 20% is probably not crazy. You put that in there, you end up with the sinking fund raising about 1.5 trillion over the 10 years. Central bank itself is contributing 50 billion per annum, so that's another 500 billion odd. And then you have recoveries and other things. It'll be challenging, clearly. It'll be challenging, but depending on how efficient the recoveries are, depending on how quickly the assets they have in their possession recover value and appreciate in value, and depending on how much time, how they're able to utilize the time available to them to spread out the sales they need to recover the liquidity, they could well do it. But clearly, the sinking fund is not going to cover it entirely. Significant recoveries have to be made.
AMCON will raise funds through the combination of recoveries and the disposal of assets. So far, it has recovered between 203 billion naira in cash and has completed restructuring deals for another 800 billion naira in assets.
Of course, in some cases of recoveries where you foreclose, it becomes an asset that's held by you. When you foreclose on the loan, you take the collateral, it becomes an asset under management. So, but looking at the recoveries per se, they refer to cash recoveries, they refer to restructured loans that are now performing, that are paying interest. So that is easily modeled. That doesn't disrupt the economy. In fact, it helps the economy by keeping companies alive and debtors alive. The other part, which is asset disposals, one has to be done very carefully. You don't want to start disposing of assets in a haphazard, unfair manner that will affect values of real estate or securities or anything like that. So it'll be a managed process. And one of the reasons why we're allowing ourselves 10 years to finish this process is so that we can remain orderly. If we started dumping, for example, all the listed securities we owned tomorrow, it will have a negative effect on the stock market, and that will be counterproductive. So we're giving ourselves time to responsibly, fairly, and transparently dispose of these assets into a market that can absorb it. And we think the 10-year time frame is just about right.